Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for this video, where I'll be talking about the importance of heavy volume coming into the market. And this to me is an important topic that a lot of traders need to understand, because oftentimes you see a big order hitting the market, and people are going to react to that, because when it comes down to trading order flow, you're really looking at the volumes that's trading. And a lot of traders like to focus in on the big volume. So before I jump into today's topic, I want you to make sure you subscribe to the channel, hit the notification bell so you don't miss any new uploads. And I've been getting some great comments from you guys. I've been getting emails from you guys saying, hey, you know what, we really appreciate the videos, keep them coming. And be sure to leave some comments on some videos that you would like to see in the future. I'm sort of trying to line up a day where I could go through all the comments and make videos specifically as, I don't want to say rebuttal, but rather, to answer your questions that you have. Because, order flow is a very robust way of looking at the market. So your support, right, your comments really go a long way in helping me create, push me to create more videos just like this one. So let's go ahead and get started on today's topic, which is about the big volume coming into the market. Because in my opinion, it's something that is often, overlooked by traders, okay? And when you're talking about order flow, now, some people will say, oh, the footprint is not order flow because it's not tracking the orders as they're coming in. What a footprint chart does is it tracks the orders as they trade, okay? And let me just get something up here, right? Where's my dome? Just bear with me here. Okay, so the dome, right? People say, no, the dome, this is the order flow, because you can see the orders going in and out of the market. Well, the problem with that is, yeah, problem is it's not trading. Yeah, it's nice to see that something came in. This is ultra bonds, to see there's 315 offered at 13. But as you know, right, as the market starts to trade up 9, 10, 11, the 315 orders get pulled, right? So there's always games being played with that, people trying to game the system. If you don't believe me, go to the CFTC website. You see every year they're catching people for spoofing the markets, right? So, and then other markets, ultra bonds is a pretty slow market, but if you're looking at, say, MNQ or NQ, right, it's moving super fast, right? And you just, you see the bid offer, it's, it's 3 ticks, right? It's just jumping around. It's just super fast, right? How are you going to make heads or tails out of what's going on when every volume is, 15 contracts more or less? Sometimes it's 6, sometimes it's 14. On a market like E-minis, okay, it's very liquid in the sense that, yeah, you've got hundreds at each level. People say, oh, you got 300 here. There's support coming in, right? But really, as a trader, what you want to focus in on is where that heavy volume is coming in, and more importantly, trading, okay? Because once it trades, people are committed to a position because they're going to want to get out at some point, okay? So, that's the dome. That's sort of the difference of the dome. Now, I'm not knocking the dome. I know I have some friends that trade strictly off a dome, and they're very successful with it. They've been doing that for many years. That's their niche, just like for me, a footprint is the niche that I like to look at. Now, other people will use a heat map, okay? They'll say, oh, look, we got this big bid in here coming in at 46.5. Obviously, you got support. I mean, even here at 48.5. Oh, there's a big bid. I'm going to start buying it, right? They're going to look for this market to go up. But as you can see right here, there was nice offers here at 54.75 or 55, and then 55.5, but it traded through those. Okay, I've always been a big believer, and this is something I learned very early on. Market is attracted to size, and it didn't really click with me. I learned that probably a year or two into the business, so to speak, back in the 90s. Is because why is market attracted to size? Is because once you become a big trader, you need size to trade against. Okay, so just sort of bear that in mind, and you could just see right here, right? It's getting attracted to this bid here at 48.5. Okay, and on the dome, right, you can see earlier there was like 300. Now it's back down to 292. Okay, I wouldn't be surprised to see this market sort of come down here and, test it, take it out. Okay, but now what I'm seeing, market first reacted to this size here at 8.5, and now some of the dome traders or the heat map traders they're reacting to it. They're saying, "Oh, the market's already bouncing off of it, so now they're jumping in." Okay, I mean that's one way to look at the market. There's nothing wrong with that, right? Again, I know people that trade with a heat map and make a lot of money. I know people that trade with a dome and they're very successful. But I like to look at the order flow because now I know traders are committed to the market, right? Based off of what I'm seeing in here, okay? Now, and there you go. It just broke right through there, okay? Broke right through that level. Everyone that was trying to buy it here, looking for this, it came down, tested that level, started bouncing up. Well, now they got to get out. They got to cover, okay? So, the next level's, well, it was down here, but they don't really see much in the depth of the book coming in here. But anyway, what I want to talk about is stuff that happened a bit earlier, right? There was some nice big size that went through. You can't even really tell here on this heat map what that size was. Okay, now this is the Ninja Trader one. I know there's Bookmap, which is a great tool, but this is the Ninja Trader heat map that I'm looking at. So just going back here to earlier, okay. All right, so again, cash opened here 8:30. You start seeing the size coming into the market. Now there was 1069 that came in here. I'm not too concerned about that because it's coming in right at the busiest time of the day. But where it got really interesting, okay, there was some decent size that came in. Market made this low here at 34.5, rallied all the way up to 50, got as high as 51. Then right in here at 44, and what is that, 3/4, or 45 rather, there was a big bid that came in the market, 23.75, 28.52. So that's, about 5,000 contracts, okay? And again, people that are watching the dome, they see this big bid coming in. Now, why is this important? Well, we had just made a low, rallied up 15 points, pulling back, and then there's a bid coming in here, okay? Is this going to hold, right? Is this going to be support for this market and the market's going to go up, or is it going to break and the market's going to go back down? Now some people, they'll how their fibs, here, oh, look at that. It's coming in literally right at the 38% retracement area, okay? So all the fib guys, they're looking to get long here. But if you're watching the order flow, it hits there, it bounces up, hits there again, gets through there. It cleans out that bid at 45. Okay, then it trades back up. So everyone that was buying here is like, yay, the market's going back up. And then slowly it starts coming back down. And this is where it gets important to watch what's happening on the footprint, what's actually being traded. So 23.75, 28.52, then the next bar, 266 goes up, it's above it, starts coming back down. Is there still going to be support in this market? Is this big order sort of what's the whole point of this order? Because everyone's, a lot of traders think that, oh, there's a big order, there's a big buyer, this market's got to go up. Okay, well, why are they buying? We don't know, right? We don't know because we're not part of that trade. We're not trading it. If you were looking at, let me just, sort of pull this in here. Let me just clean up this chart really quick. Take off some of this stuff. Just get a simple bar chart, okay? From yesterday, what do we got here? This is a 1-minute chart. Remember, right? We've been selling off. This is yesterday. This is the day before. So, we're selling off from 4,500 all the way down, to, where's cash open? Somewhere in here around 44, 45. So, over the last several days, almost, 70-point sell-off. I mean, obviously yesterday we had that big sell-off, and today we're sort of continuing it. But so who knows? I mean, this could have just been someone taking profits from the day before or 2 days before. I don't know. What I do know is this bid is done. Once it starts coming down here, it's only got to get through 160 contracts here. and then it breaks down. Okay, once it stays below this level of 44.45, once it closes below this level and staying clearly below this level, I could be looking for this market to potentially go test this low here. Right now, I'm not saying it's going to sell off another 100 points or anything, but at least now I know that this buyer, he's done. He's out of the way. I don't have to worry about him anymore at 45. Market comes back, gets down to 38, sort of bounces back up to 42, sort of comes down in here, tests the low here at 34.75, again, gets within 2 ticks, sort of comes back up to that 45 area. Was there some buying? I mean, there was 793 here, but on the offer side, 500, 900, 471. To me, this just sort of looks a bit like normal order flow. What was, again, not order flow, but rather technical analysis 101. If this was going to be support area, previous support becomes resistance, right up here at 45. The ICT guys will call this some special big name, but it's just really previous support becomes resistance. And then we start going back down. And then look, we get down here at this 44.40 area. Okay, just draw another line in here, 2 here. Now, again, we had traded down to 35.25, back up to 45, and then sort of in the midpoint, what do we see? We see another big order come in here, right? We see 1,300, 4,000. So another 5,000 contracts being bought here at 40. First one was 45. Now another 5 points lower, it's coming in here at 40. Again, I don't know if this is a new position. Maybe someone saying, "Oh, this low is down here at 34.5." We did obviously trade lower, and then we're trading around this area for 15. Just from here at 921 to here after this low has been made, we're trading around it for about 10 minutes. Okay. And then somebody stepped up, said, "Yeah, hey, I'll buy 5,000 here." Okay, let's see if this is going to be support or not. Well, it hit there. Did it really bounce? If you're watching a dome, you see this big, massive bid sitting in the market at 40. You're jumping in front. Well, if you jumped in front, it only went up 1, 2, 3 ticks. And if you jumped in front at 40.25, it went up 2 ticks. Basically 1 tick, because it only traded 8 contracts here before breaking down to 38. Okay. And then it's sort of rotating around it here. So you had a big bid coming in here at 40. Well, then we're trading below it. Then we come back up. Where's my bidder? 198, 367. He's not there. So if I know that the buyer that was here at 40 is done, do I think the market's going higher? I mean, do I think there's any more support coming in? Probably not. Then the market breaks down, right? Makes that new low at 34.25. And then it starts going up, right? Up, green candle, green candle, green candle. Then it gets back up here to 45. Now, see a big buyer coming in here, 2307 at 44.45. Why is this one more important? Think about it for a second. Here, the bids came in. We were trading right around that level for previous 10 minutes. Here, the bid came in. Again, we were trading around this level for about the previous 10 minutes. Now, we came down, made a new low, and we're rallying. We rally about 10 points off the low, and now a big bidder comes in. Is this the same guy that was buying earlier over here? I don't know. I don't know, right? But what I do like about this is it's not coming in an area where it had been trading right in here to the left of the chart, right? So it sort of gives me a little bit of a sense that, hey, you know what? Maybe someone's coming in and thinking that this low, the low of the day, has been made. I'm more inclined to think that the buyers here at 40 and earlier at 45, maybe they are fresh buys. I mean, I don't know. Maybe people took a look at the chart, after the chart had, after the market had sold off, 70 points in the last couple of days and thought it was a good buy. But this one here, to me, out of the three areas where there's the heavy volume that came in, right here at 840, 848, then here at 923, then here at 940, this is the strongest one that I would be interested in buying because the market's already moving up off that low, and it's coming in sort of as, to me, as fresh buying. That's how I would identify this, as opposed to this one where we've sort of been trading around. I mean, is this one powerful? I don't know. I mean, I don't like it in the sense of, even though it's a big volume, would I be looking to take that trade? No. I mean, it's an area where we're sort of trading sideways. Because remember, if we're trading sideways, right, and how do I know we're trading sideways? Well, I just look to the left, right? It's sort of in the middle of this range. That's an easy place to get off volume, to get off size. If you're a big trader, because you're smack dab in the middle of the range, that's where you can move size without impacting the market. Whereas this one, the market is rallying. It's just rallied 10 points. And it's almost like someone's coming in and saying, oh shit, I got to get in. I think this market, I think the low has been made, and they're buying it here at 45. So I think this is more of a fresh buy. Whereas, this one, these two earlier ones at 40 and at 45 earlier were probably, in my opinion, again, I'm just postulating it, I don't know for sure because I'm not involved in that trade, that it may have just been some short covering from earlier, maybe the European session or even the day before that. Whereas this one is more, to me, it looks more like someone that's aggressively looking to get long. To me, there's more aggressive action in this one than these previous ones. Okay. So again, if you're looking at the dome, right now we're back up above 50 here. It's hard to see the size because you don't see, no one's going to plop in 2,000 contracts on the bid. I mean, sometimes they do that to get a specific reaction to the market, but in generally speaking, you don't. On the heat map here, all right, you don't necessarily see it in there. Okay, now the book map, I believe, they got their ways of seeing it, with the bubbles and all that stuff, but maybe you could have picked it up there. But I like it when I see big size coming in on the bid in a move. To me, that's more important than big size coming in on the bid in a sideways market, in an area that you've just been trading at for the last 10 minutes. Right? Because to me, that's more of a sign of, when a market is going sideways, when you see that big bid coming in, it's just somebody is trying to get into a position without necessarily moving the market, or get out of a position without moving the market. But then once the market starts moving, and I see some guy sort of chasing it, plopping a big bid here, a big bid up here at 47, to me that matters more. Right? So again, it's a little bit more of a nuanced and advanced concept for understanding what you're seeing in the order flow. But when you see the big size, try to put it in context. Why is there big size coming in here? What does that mean? Is someone chasing a market that's moving up, thinking, hey, this is a great, it's cheap here, I should buy it? Or an area where, maybe someone is covering it from the day before. Now, again, this one here at 45 could be covering. I don't know, but I just find this one much more appealing at 45 than trying to buy it here at 45. Okay. And again, it's a 38% retracement. Okay. But we know, right? Sometimes they hold, sometimes they don't hold. So anyway, guys, I hope you guys are able to grasp this video, sort of the importance of understanding where the heavy volume is coming and what it means to the market. So if you haven't already, be sure to subscribe to the channel. So thanks again for watching and being a part of my, my order flow trading community. Your support is appreciated. And I'll see you guys on the next video. Bye-bye.